Welcome to the deep dive. Today we're tackling a subject that, well, let's be honest, often makes even seasoned tax pros maybe wince a little. Alternative minimum taxable income, or AMTI.
It's definitely got a reputation.
Right. Dreaded by students, can give professionals a headache. But our mission today, make it clear, focusing specifically on those AMTI exemptions and just how crucial they are in the whole calculation. But before we really get into the weeds, just a quick reminder. This deep dive draws from material provided by Farhat Lectures.
That's right.
All the content, the examples we'll use, the explanations, it all comes from the fantastic accounting resources over at farhatlectures.com. So whether you're an accounting student prepping for the CPA exam or already a professional, definitely check out the website.
Good call. Lots of extra practice questions, video lectures, all that good stuff to back up what we talk about today.
Exactly. Big thanks to Professor Farhat for making this material available to us.
Absolutely. And it's worth remembering where we are in the bigger AMT picture. For listeners who've been following our AMT series, we started with regular taxable income. Then we talked about adding back certain adjustments and preferences.
Right, those items treated differently under AMT rules.
Exactly. Things like certain deductions, maybe accelerated depreciation, that kind of thing. Stuff the regular tax system allows, but AMT pulls back in to broaden the base.
Gotcha.
So all that calculation work gets us to this point, AMTI, before we even think about exemptions. Today is really, you could say, part 3 of that process, applying the exemptions.
Part 3, okay. And this stuff pops up all the time on the CPA exam in tax courses. So our goal here is really to demystify the specific, tricky area for anyone looking to get a solid handle on tax essentials fast.
Makes sense. And yeah, a common hurdle even before exemptions is just figuring out what is an adjustment versus a preference. Why are things treated differently?
Right, the underlying logic.
Exactly. Understanding that AMT philosophy. But once you've wrestled that AMTI number down, the exemptions are the next big piece of the puzzle. So what is an AMT exemption fundamentally? Well, it's basically a specific dollar amount that the rules let you subtract from your AMTI.
Okay, a deduction specifically for AMT.
Pretty much. It reduces the income that's actually subject to the alternative minimum tax. Think of it as a buffer. It's meant to help ensure the AMT mainly hits higher income folks who might be using a lot of deductions and credits and kind of shields middle income earners.
Keeps it from casting too wide a net.
Precisely. So let's put some numbers on it using 2019 figures just as an example. For a single filer back then, the exemption was around $71,700.
Okay.
But here's the kicker. That exemption doesn't stick around forever. It starts to phase out, meaning it gets smaller once their AMTI goes above $510,300.
$500,000 roughly. That's the threshold.
That's the key idea, yeah. The threshold where it starts to shrink. Now, if you're married filing jointly, you get a bigger exemption, about $111,700 in 2019.
Makes sense.
But again, there's a phase out. For joint filers, that starts when AMTI goes over about $1,020,600. So, just over that $1 million AMTI mark.
A higher threshold for joint returns.
Right. And then for married filing separately, it was roughly $55,850. And the phase-out starts at the same point as single filers, that $510,300 AMTI level.
Okay, I see. So these specific numbers, the $71,700, the $111,700, the thresholds, those are 2019 figures. They'll definitely change, right? Inflation, new tax laws.
Absolutely. They adjust year to year.
But the core idea, having an exemption, having it phase out above certain income levels, the way that phase out works, that stays the same.
That's the crucial takeaway. The mechanics are consistent. Learn it once, you've got the concept down.
Got it. That's really helpful. Learning the principle, not just memorizing numbers.
Exactly. And speaking of those mechanics, let's talk about how that phase-out actually works. It's pretty important.
Okay.
So remember that exemption buffer. For every single dollar your AMTI is over that income limit, your exemption gets reduced by 25 cents.
25 cents on the dollar. Wow.
Yep, 25%. It's designed to be fairly steep. It means that once you cross that threshold, the benefit of the exemption disappears relatively quickly for higher earners.
Okay, let's make this concrete. Walk us through an example. The source material uses margin homer, right? Married filing jointly.
Perfect example. Let's say margin homer have an AMTI of $1,100,000.
Okay, so that's definitely over their phase-out threshold for married filing jointly, which you said was around $11,600.
Exactly. So their starting point, the initial exemption they'd potentially get is $111,600.
Right.
But because their $1.1 million AMTI is over the $1,020,600 threshold, we know that $111,700 is going to be reduced. So let's calculate their actual adjusted exemption. Step 1, Find out how much their AMTI is over the limit. So $1,100,000 minus the threshold of $1,020,600.
Okay, doing the math, that's $79,400 over.
Correct. $79,400 is the excess amount. That's the amount subject to the phase-out rule.
Yeah.
Step 2, calculate the reduction. We take that excess, the $78,400, and multiply it by 25%.
Okay, 25% of $79,400, that's $19,850. It's exactly. So $19,850 is the amount of exemption, marge, and home or lose. Step 3, compute their final adjusted exemption. We take their initial $111,700 and subtract the reduction we just calculated, $19,850.
Okay, $111,700 minus $19,850 leaves them with $91,850.
That's it. Their adjusted AMT exemption is $91,850.
Wow. So they lost almost $20,000 off their exemption just because their income was about $80,000 over the threshold.
Yeah.
That 25% phase out really bites.
It does. It shows how quickly that benefit erodes once you hit those income levels. It really underscores the need for planning if you think you might be near those thresholds.
Yeah, no kidding. It feels a bit like a cliff, even though it's technically gradual. $1 over costs you 25 cents of exemption.
Right. It's not a literal cliff where you lose it all at once, but the impact scales up quickly. Every dollar over matters. If you're used to getting the full exemption, seeing it shrink can definitely feel like a major shift in your tax calculation.
Okay, that makes sense. So we've seen how the exemption is calculated and reduced. Let's take it to the next level. How does this fit into the full AMT calculation? Good question. Let's use another scenario. Imagine someone, again, married, filing jointly, with an AMTI of, say, $217,245.
Okay, $217,245. That's well below the $1 million phase-out threshold for joint filers.
Correct. So step 1 is applying the exemption. Since their AMTI is below the phase-out threshold, $1,020,600, they get the full exemption amount.
Which was $111,700 for married filing jointly in our 2019 example.
Exactly. So we take their AMTI of $217,245 and subtract the full exemption of $111,700.
Okay, that gives us $105,545.
Right, $105,545. This is their AMTI after the exemption. It's the actual amount of income that the AMT rates will be applied to, the AMT base.
Got it. So now we apply the AMT tax rates.
Now we apply the rates. The AMT system generally has two main brackets. There's a 26% rate that applies to AMT base up to a certain amount. In 2019, it was $194,800.
Okay.
And then there's a 28% rate for amounts above that $194,800 threshold. In our example, the AMT base is $105,545.
Which is clearly below the $194,800 ceiling for the first bracket.
Right. So their entire AMT base is taxed at the lower 26% rate. We multiply $105,545 by 26%.
$105,545 times 0.26 comes out to $27,442.
$27,442. That is their calculated alternative minimum tax, their tentative AMT liability.
Okay, tentative AMT is $27,442. Now, the crucial step, right? Comparing it to their regular tax. Let's say for the same taxpayer, their regular income tax liability was calculated as $25,740.
Exactly. Now we compare. We have the AMT calculation, $27,442, and the regular tax calculation, $25,740.
Correct. And because the AMT is higher, the taxpayer has to pay the difference as an additional AMT.
So the difference is $27,442, which is some $1,702.
Precisely. They owe an additional $702. This amount gets added to their regular tax, effectively bringing their total tax liability up to the higher AMT amount. The AMT acts as a floor. You won't pay less than that amount.
So they end up paying the full $27,442 in total tax. Okay?
Yeah.
Now, when someone is in this AMT situation, does it affect their ability to use tax credits? Good point. Yes, it often does. Many common credits, things like the child tax credit, the child and dependent care credit, maybe some education credits, they often get limited or even eliminated by the AMT.
Why is that? Just because the income levels are typically higher for AMT payers?
That's part of it, and also the specific rules governing how those credits interact with the tentative minimum tax calculation. However, it's not all credits. Some, like the adoption credit or the foreign tax credit, might still be available to reduce AMT liability. You have to check the rules for each specific credit.
Okay, so something else to watch out for. Now, practically speaking, when a client sees this extra tax, like that $7,702, where does it actually show up on their tax return? It's not always obvious.
That's a super common question. It can look like it came out of nowhere if you don't know where to look. So that $702 additional AMT, it starts its journey on Form 6251.
The main AMT form.
Right, alternative minimum tax individuals. That's where the whole calculation we just walked through happens. All the adjustments, preferences, the exemption calculation, the tax rate application, it all culminates there.
Okay, Form 6251, then where?
From Form 6251, that AMT amount, or specifically the difference if AMT is higher, flows over to Schedule 2 of the Form 1040. Schedule 2 is titled Additional Taxes.
Ah, okay, so it gets grouped with other non-standard taxes.
Exactly. And then finally, the total from Schedule 2, including that AMT amount, lands on the main Form 1040 itself, typically on line 15, which is labeled something like Other Taxes, including Self-Employment Tax.
Got it. So it goes 6251 on a Schedule 2 Amended Form 1040, line 15. That's the path.
That's the path.
And in practice, yeah, that's exactly what you do. Client asks about that number on line 15. You trace it back. See, it came from Schedule 2, which came from Form 6251 because your AMT was higher.
Right. And even though tax software does all this heavy lifting automatically,
Thank goodness for software.
understanding that flow is absolutely critical for explaining it, for catching potential issues, and definitely for exam purposes. It's about knowing the why and the how, not just seeing the final number. Being able to trace that $7,702 builds confidence.
Totally agree. Okay, so wrapping up this deep dive then, we've really unpacked AMTI exemptions, looked at why they exist, how they phase out for higher earners, walk through a real calculation, and even followed the money onto the tax forms. The goal, as always, was to give you a shortcut to getting comfortable with this, let's face it, complex tax area.
And maybe leave folks with a final thought. You just mentioned tax software. It's amazing. It handles Form 6251, all these calculations. But true mastery, whether you're aiming for the CPA exam or advising clients, it really comes from understanding the mechanics underneath the software.
Knowing what the black box is actually doing.
Precisely. It's not just about relying on the tool. It's about building that solid foundation so you can look at the output and say, yeah, that makes sense. Or maybe, let me double check that calculation. It lets you tackle any scenario with confidence, not just the ones the software handles perfectly.
That's a really powerful point, especially now.
Yeah.
Don't just trust the inputs and outputs, understand the process.
It really boils down to being able to problem solve, to explain, to advise intelligently. That requires knowing the why behind the numbers. That's where the real value is, I think.
Couldn't agree more. Well, if
Yeah.
you want to keep building that foundational knowledge and really solidify your understanding, we definitely encourage you to head over to farhatlectures.com.
Yeah, great resource.
Loads of comprehensive materials, practice questions, videos, everything you need to reinforce what we covered today and explore other accounting and tax topics in depth. Thanks so much for joining us on the Deep Dive.